So if your total costs are $1 million, all of the stuff that you're teasing out here should equal up to $1 million. If it equals up to $950,000, you got a problem somewhere. So it's going to be kind of it's almost like a TurboTax or any other thing that you might do where it'll kind of like look and audit for you, and they've tried to build in some self-checks to assist with that process. Any questions about the other costs? Pretty straightforward. This is a little more simple. Remember, your bigger issues are going to be around facilities, salary, and vehicles. That's where you need to get it right. All this other stuff, I mean, pretty easy, anecdotal, you plug it in. Okay? Now, revenue is the other. We're doing pretty good here. We will have you out by 1:30. So, facilities? Yeah.
Do not include facilities that are used by contracted entities, i.e. that your organization does not itself occupy. So you'll account for the cost of what the person is doing at City Hall, but you're not going to include City Hall as a facility because you don't occupy
it. So that's a good, so right there in that definition is if you do not personally occupy the building, you do not include it. So in the example somebody asked about City Hall they did all the finances for you, but it's not under you're just going to allocate it, make sure that they charge you for it, but you're not going to include it as a facility. So basically the facilities that you're going to list are what you occupy. All right. Good clarification. All right, let's talk about revenue really quick, because this is something, guys, we advocated, and to be honest with you, we were quite surprised that we won, because typically in most healthcare sectors, they only look at Medicare margins. So they really take a look and figure out when MedPAC looks at it, they're going to look at what they call your overall Medicare margin. And they're basically going to say, are we paying these entities enough money to keep them in the network for our Medicare recipients? Well, most of us know that we're 911. It doesn't really matter what type of insurance you have. If you call 911, I'm going to respond to you. It's not like I can say, oh, you're Medicare, you're having a heart attack, but I don't take Medicare patients, so die. I mean, we're not going to do that. So they really shouldn't be looking at an overall Medicare margin, because I really don't have an option to either be in the network or out of the network. So they should be looking at our overall margins. So we advocated for that as an industry, that you should be looking at all of our revenue, not just our Medicare and Medicaid revenue. And we won. And so with that win, though, came some complexity to tease the data out appropriately so we could get paid for our uncompensated care, because we have an enormous amount of uncompensated care that we do not get paid for as an industry like hospitals do. When hospitals get disproportionate share funding, uncompensated care funding, EMS does not, even though we do more than 15% uninsured. Okay? But we're not technically defined, so there is no relevant reimbursement to that. Because we won that, we now have to make sure our systems are set up correctly to input the correct revenue types. Now, this is something that your billing agency should be able to do. They just need to make sure they have this stuff set up correctly. So most people in their revenue reporting on your P&L or what have you, you pretty much know this is what my overall revenue receipt is. Okay, so you're going to actually put that number in, regardless of your revenue sources, regardless if it is from Medicare or you run and do donations and you have a big donation drive or charity drive or whatever it is, it's all revenue you receive. Safer grants, anything that you receive, earmarks, tax subsidies, what have you, all revenue related to the provision of ground ambulance services you're going to report on. That's basically your cash in the door. Okay? It's important to note that your calendar year, fiscal year reporting is cash received, not accrued, received. So if you're on calendar year, it's whatever money you get in from January the 1st to 12/31.
Does it have to be tied to transport?
Not tied to transports, nothing. Cash received. I don't care if it's cash received from transports that occurred 5 years ago because your collection agency went after them, or a judgment, they put a judgment on something and they wanted to buy a house and had to pay it off. It's cash received in the door in that calendar year or fiscal year. Yes, ma'am.
You have money coming into multiple funds, say operating versus capital, do you report all of that or just the operating?
You report any cash received. So operating, yeah, I mean, yeah, if you've got capital, I mean, it's going to be all funds received for ground ambulance in that year. Doesn't matter about your transports. So it's basically what we would call cash-based accounting. That's basically what this is. Now, your costs, they did not define as being cash-based or accrual. You just follow whatever your current process is on if you do cash-based accounting or accrual-based accounting on the cost side. But on the revenue side, it is cash-based. I'm just stressing that because a lot of people, it's not a normal, because they're relating that I'm reporting data from transports in a lot of this, but my revenue is only looking at the cash received in that year. Now, we didn't challenge that too much because it actually inures to our benefit in the very first few years of the reporting process technically. So, 2 questions that you're going to be asked at the very beginning. Can you report it by, we're looking at transports right now, can you report it by revenue type and payer category? Yes or no? So I'm going to talk about revenue right now as it relates to your ambulance transport on how you bill the Medicare program, Medicaid, and other private insurers. Okay, so if you transport a patient, typically your billing company turns around and bills some payer source that might be available, or they might bill it to self-pay, or they may write it off because you might be in an area that subsidizes, that has a tax subsidy that subsidizes it, or some type of millage. You're going to say yes or no. I'm going to try to make sure people, when you start approximating, when people begin to approximate things, you never approximate correctly, ever. We just don't. It's in our nature. It's just we think we're doing it, and then when we actually go back to the data and cut the data tells us something totally different. So I would suggest, especially if you're in a billing, they should be able to do what we're going to talk about here, and it's split into 9 categories. So there's 9 payer categories that they're going to ask you to report by based upon the volume of transports you do. Now, many of you guys have talked about billing agencies that you use. They should be able to tease this data. If they don't, I would require them to do that. It is to your benefit. And this will be to our benefit, and we've all talked about wanting to get more money into our industry. Here is how we're going to do it, folks. All right? So Medicare fee-for-service, which is what most of you think it is. Patient has Part B, you bill the Medicare program, WPS. You're billing WPS for those transports, so that's what that is. Then you've got what we call Medicare Part C, which is your Medicare Advantage. It's those individuals that have chosen, I'm going to go to a managed care plan, and I'm a Medicare recipient, and I want to bill my Medicare for other different options that I would like, which about 48% of Americans that qualify for Medicare are now under a Medicare Advantage plan. Okay, this new administration is really pushing to privatize most of that out. So you're seeing a push of managed care over the last 4 years that we've seen an exponential increase in managed care. Very important to separate those 2 out, 2 different avenues of how we get paid. Okay? Medicare fee-for-service and Medicaid managed care. Is Michigan a managed care state for Medicaid? Okay, so you have Medicaid and Medicaid managed care here as well. You got to separate those out. You have Veterans Administration, straightforward. If you're a TRICARE active duty, military, you're going to be TRICARE. You got workers' comp. Everything else falls into commercial insurance. That means if you build a facility, a motor vehicle accident company, all goes into commercial. Don't worry about that. It doesn't make sense. That's just where it goes. Okay? And then your patient self-pay, and this is the one area that the billing systems have to change, is this means it's anything self-pay that goes to the patient. So for instance, if they had Blue Cross Blue Shield and Blue Cross Blue Shield applied their whole bill to the deductible and then went to self-pay, it is a self-pay, not a commercial insurance. And a lot of billing systems are going to have a challenge doing this, especially if you use Zoll and some of these other systems that are the main billing systems. They're going to have to tease this out, and it's going to be probably a custom report to do that. But that's anything, if Medicare, you bill Medicare and they deny the claim and it bills to the patient full charge, it's self-pay, not Medicare. So we got to get those into the buckets because what we want to show them is how much self-pay we do. So here's our costs. And look how much self-pay we do. We only get paid on 30% of everything that we do. Does that make sense? This is where we're teasing those numbers out. Okay? Stressing that is important. People that don't understand billing, make sure your billing agencies understand that. And your key takeaway for you that may not really understand reimbursement is, I want to know how you're separating this out, and please show me the report how you're doing it. That's what you ask them. Make sense? Question.
Quick question, what if it's like a 50% copay? We're getting 50% payment, 50% copay, how do we split them?
Okay. So basically you would go anything with self-pay code, so you would have 50% of the monies, if it was, say for instance it's Medicare, 80-20. 80% would go into the Medicare bucket as payments, as cash received to Medicare, and the other 20 would be in self-pay. Okay. And I will tell you that the insurance, that some of the canned reports are going to have to be fixed to allow for that when you talk about payer categories. And this is an area that we are trying to work with the billing agencies that they got to get this fixed.
Someplace else we reporting contractual balances.
So you're not doing anything with contractual allowances at this point in time. We're just basically looking at cash receipts to offset cost is what they're really looking at right now. And to really tease out that when you look at how much self-pay that we're doing, it'll be glaringly obvious. If we get these buckets right, it'll be very glaringly obvious how much self-pay this industry is doing. And not self-pay just by people being indigent, but co-pays and deductibles, and people keep changing our benefits. As they go to managed care, they're changing the benefits majorly.
We have to split up between ALS, BLS, treat no transfer?
Not on here. No, it's all aggregate.
Okay.
It's all aggregate. We wanted to, but no, it's all aggregate. I was trying to remember because we were advocating for it, and that's why I wanted to make sure. I don't think we won that. We didn't win that. Yeah, we didn't win that. Yes, somebody had a question? No, okay. So then there is this question here, which I think is just kind of crazy, but all right. Every payer type here, you're going to ask the question, do you bill it never? Do you sometimes bill it? Do you usually bill it? Or do you always bill it? I guess there are agencies out there that sometimes will do it and sometimes won't do it. I have been coached that there are some that do that. So that is why, because I just have thought this is the dumbest question ever. But there are some agencies out there that sometimes do it and sometimes don't do it. They pick and choose what they do. Whether it's legal or not, I don't know, but they might be using the safe harbor in areas where you're a governmental entity that sometimes is allowed to do something and not others is the only thing I can think through the process. But there's obviously people, and we have been coached by that there are in the stakeholder roundtables that they did, people that sometimes don't do it or whatever. So if you always bill traditional Medicare for stuff, then you'll always say always. But this is what you say, all right?